Welcome back to the Energy Signal Podcast, your one-stop shop for the latest trends, policies, and market moves shaping the U.S. and global energy landscape. I'm your host, Josh Lefebvre, coming to you from the energy capital of the world, Houston, Texas. We are recording episode 2 of the podcast on Sunday, August 10th. Let's get into it. This week, we're unpacking why crude oil fell nearly 6%, while natural gas held steady at the $3 mark. We'll look at the biggest U.S. energy players and how they closed their weeks. We'll break down some of the biggest news stories, including U.S. tariffs and how they continue to reshape the global energy flows. We'll look at the latest rate drop across West Texas. And then finally, we'll look at why Washington's energy playbook now reads more like a national security strategy. Plus, the $7 billion solar program that just got completely scraped, and then a reset on offshore wind policy. This episode of the Energy Signal Podcast is brought to you by StageTracker AI, the real-time frac intelligence platform that's powered by AI agents that help engineers and operators stay ahead in the frac game. Whether you're trying to optimize pump schedules, reduce NPT, or benchmark crew performance, StageTracker gives you the live view of what's happening, stage by stage. No more waiting on the post-job report to know if you're behind. Learn more at stagetracker.ai. because every minute counts at the job. Our first section is Fuel and Flow, which goes over the biggest markets, stocks, and indexes in the energy sector. We like to start it off by going over the commodities first. So crude oil closed off last week, or actually rather opened this week, at $67.22. It closed Friday, August 8th at $63.35, decreasing nearly by 6%. So yet a second steady week of decline in oil prices. And this seems to be fueled by a weaker jobs report, which has been all over the news. And even though Trump seems to be denying it, that's definitely got some people scared. While also OPEC is continuing to increase their supply, despite the demand possibly not being there. Natural gas stayed almost steady. Well, actually, it fell a little bit. It started off the week at $3.10. By Friday, August 8th, at close, it dropped down to $3. So a decline of 0.87%. The decline seemed to be, again, related to a slight oversupply, while some softer weather reports expected for the month of September. Next up, we like to go over the biggest U.S. players. ExxonMobil, they started off their week at $109.64. They dropped down to $106.80, decrease of 2.61% rather. And going back to last week, despite Exxon's strong Q2 earnings, again, the fears just have people thinking that the demand is not going to be there. So a second straight week of falling stock prices. Next up is Chevron. They started their week off at $151.40. They closed off the week at $155.01, which was an increase of 2.4%. And they also had some good Q2 earnings. They gained, their acquisition went through last week, so that seems to be a strong indicator. Also, Chevron mentioned that they're entering into the lithium market, so this company is looking up and up. Next up is ConocoPhillips. They started their week off at $92.76. They closed the week off at $93.91, so up 1.24%. So they seem to have, a solid week. Q2 earnings certainly helped boost their confidence last week. So what I can say from that is that with Q2 earnings released from most of these large companies, despite strong numbers, strong production, the stocks, well, they are still fairly low, and at least we can say that they've stabilized a bit. Again, I think this has to do a lot with the major shifts going on in the markets right now. There's a lot of policy shifts going on with Trump in office. There's the tariffs that are going on that are reshaping all of these energy policies. And then, of course, the weaker job market. So really, to me, it just seems like the market's unsure how to respond right now. Next up is Deals and Drills, which goes over some of the biggest news stories, some of the biggest acquisitions news from the week. So our first big story is, of course, the tariffs. The U.S. and India trade escalation, that continues to be ongoing. In fact, Trump signed last week the executive order actually putting into effect that all Indian imports would now be facing a 50% tariff. And again, this is largely in response to India continuing to purchase Russian oil. If you recall from last week's episode, I mentioned that India said that it would continue to purchase that oil. It said that it had a lot of long-standing deals in place and it couldn't just simply cut it off right away. But again, this comes from rising tensions between the US and some of its strategic partners, basically unsettling the global energy demand and all these different flows that are going on right now. The next up is there was a story that came out of the Washington Post. And again, this one was interesting, but certainly not shocking. Basically, it was stating that internal documents revealed that the Trump administration is actually using these tariffs in many cases, not just for financial outcomes and geopolitical outcomes, but instead it's using it in a lot of cases for national security, right? By reducing Russian oil reliance and steering foreign infrastructure investments towards the US, they can actually shift these types of policies and, basically take money out of Russia's pockets, putting them in a position where eventually they have to talk peace with the Ukraine. Our next big story is that US energy firms are continuing to cut the number of oil and natural gas rigs. And this is for the third week in a row. This is according to Baker Hughes, where they actually said that in Texas specifically, biggest oil and gas producing state in the US, the rigs fell to their lowest count since, get this, October 2021. And when this count starts to fall, it's an indication of the future, right? Everything is pointing to the fact that the demand is just not there. And, it's probably because of the weakening economy, weakening job reports. People aren't traveling, so no shocker there. Our final segment, we like to go over renewables. So there's been a lot going on in the world of renewables lately. Specifically, our biggest story is that EPA, under the current administration, terminated the $7 billion Solar for All program. And this program specifically was designed to expand residential solar in low-income communities specifically. Now, this policy was originally created under the Biden administration, and it was awarded to 60 recipients, including states, tribes, regions, for investments such as rooftop solar panels, community solar gardens. So yeah, completely gutted by the EPA. Now, although there's already been $53 million allocated from this program, which I don't think is going to be rolled back, it does seem like the other billion is no longer going to be in effect. In fact, that's actually getting rolled back right now, according to AP News. In other big renewables news, Trump is pulling a lot of the offshore wind turbines. He's currently looking at the financial costs of, in fact, even going in and decommissioning some. He's certainly put a pause to any new contracts or any new leases, and he's essentially just pulling the veil on a lot of these. So over the last 2 weeks, we've talked about Trump really pulling funding for a lot of these renewable energy projects. And you would think that, oh man, Trump must really hate renewables. Well, it's a little bit more complicated than that, right? So many of these renewable projects, specifically the offshore wind projects in the US, are backed by European developers. We're talking Ørsted, we're talking Equinor, and sometimes they're with foreign state ownership. So again, not a good look. The supply chain and manufacturing of this turbine technology, the components, specialized vessels, they are often coming from overseas. So really, Trump is just trying to really bring back that American manufacturing. And again, with America's fossil fuels, America's coal industry, all being domestic, there's really been a focus around that. Well, that concludes our episode 2 of the Energy Signal podcast. And the bottom line and the takeaway from this week is that there are still a lot of fears around energy, around oil. As oil continues to drop, we're going to see some massive effects. And, with Trump, with all of these different tariffs and policies, who knows, right? I personally have not seen this much variation in this industry in some time. With renewables being completely gutted, I'm hoping that the price of oil and gas continue to increase. I hope they start to see some kind of shift up because the fundamentals of these companies are there. They're producing more than ever. They're more efficient than ever. Their Q2 earnings are great, but yet it's just that the stock is not reflecting that. So, it's time for us to start being realistic, but only time will tell. So with that, this is the Energy Signal podcast signing out. Until next week. See you later.